Okay, so now you know what the accounting equation is, and you've seen some examples that you understand. Now we're ready to take it to the next level. I'm going to show you some more advanced examples. But stick around to the very end because the last example is the trickiest one yet. If you get stumped by accounting, I'm here to help you with that. I'm Professor Capko, and I help make the complicated easy to understand. Statistics show that over 90% of the people watching my videos aren't subscribed. So please subscribe and hit the notification bell so you won't miss any helpful tips and tricks. Having said that, let's get into the video. If you don't know what the accounting equation is, start with the video I've linked up here. In that video, we'll discuss what goes into the accounting equation. Things such as assets, liabilities, owner's equity, otherwise known as shareholders' equity. And in my previous video, I worked through some examples of how the accounting equation is impacted by various transactions that a company may engage in. If you haven't seen that video, I'm linking it here for you. Take a look at that for those examples. But today, we're going to delve into some more advanced transactions, including transactions involving dividends. Let's dive into those examples. In this example, a business sells $1,000 worth of inventory, which cost the business $400 to purchase. So they sell. So that means that they're going to receive cash for that in the amount of $1,000. So that is an increase in their assets for $1,000. However, at the same time, that inventory cost $400 to purchase. That means their inventory went down by $400. So there's two changes in the assets. It goes up by the $1,000 cash that has come in through the sales, but it has decreased by the $400 worth of inventory that has gone to the customers. So that means we have a net change of an increase of $600. So our assets have increased by $600. Now we know the accounting equation always must remain in balance. It must always equal. So we got to look what over here is going to increase by $600. Well, there's no change in liabilities. We don't owe any money to anyone. So that means there's an increase in owner's equity of $600. That's how you would handle that example. We're going to go on to the next example and take a look at that one. In this one, employees of the company work all week. They are owed $2,500 in wages, which will be paid on payday next week. So let's look at how that works as of today. So we have $2,500 that is owed to the employees. That means our liabilities of this company have gone up $2,500, an increase in liabilities. They haven't paid it, and they're not going to pay it until next week. So that means that there's no change in the assets. Once they pay it, maybe the assets will go down because the cash will be going to the employees. But in this case, we just owe the employees $2,500. Since there's no change in assets, to keep things in balance, that means there's going to be a decrease in owner's equity of $2,500. And that would keep this equation, the accounting equation, in balance. All right, let's look at another example. If you're finding this helpful, please smash the like button. It's going to help us with the YouTube algorithm and get this out to more folks that have trouble with accounting. So let's look at this one. The business declares and pays cash dividends to its owners in the amount of $5,000 total. So that means that the cash is going down by $5,000 because it's going from the company and it's not going to be in the company checking account anymore, but be paid to the owners. So that means the assets of the company go down by $500. There is nothing owed because in this example, they've already paid the cash dividends. So what do we do to keep it in balance? Well, the owner's equity goes down by $5,000. So we have $5,000 decrease on the left-hand side and a $5,000 decrease on the right-hand side. Our equation remains in balance. The owners, of course, are happy because they're getting money out of the company in this case. All right, let's look at our trickiest example of all. At least up to this point, we got the business declares and issues a stock dividend of 1.5 shares for each share owned by the stockholders. Now, if you don't know what a stock dividend is, that means that in place of cash dividends, each owner of a share of stock will receive a certain amount, predetermined amount of additional stock. This would come from the treasury shares of the company. We can go into that in another video in more detail, but in this case, there's a stock dividend of 1.5 shares for each share owned by the shareholders. So each shareholder, for every share of stock they own, they're going to receive an additional 1.5 shares. So this is quite a generous stock dividend in this case, and therefore more shares will be going out of the treasury. No cash is changing hands at this point, and no other asset is coming into or leaving the company. So there's no change in assets. And because the stock dividend has been declared and issued, there's no liability. So there's nothing that is owed to anybody. It has been completed. The shares from the treasury have been delivered to the shareholders. So there's only a change perhaps in owner's equity. So let's look at that. Is there a change in owner's equity? Well, if there's no change in assets and there's no change in liabilities, there is no change in owner's equity. And no change in owner's equity means everything remains in balance. So this one's a little bit tricky. There's just a dilution, it is said, of the number of shares. So each owner owns more shares. There are more shares out there. Each share likely may be worth less, but you have more shares. And this may be done for various reasons, various market reasons. It may protect the cash position of a company. There's a lot of different reasons why a company may do a stock dividend, but there is no actual change to the owner's equity. There's no change in assets and no change in liabilities. They all remain the same. So that one was a little bit tricky, but I wanted to make sure that you understood how that one worked. And that is only with a stock dividend, not a cash dividend. Now you know how to handle some of the most tricky examples of the accounting equation. But that's not all you need to know. There is a whole lot more out there, and I'd like for you to take a look at this next video that I picked out for you right here. Until next time, keep your grade alive and subscribe.